All right, so here's a story I did on Market Beat this morning about the Verizon earnings report today. And, the fact that one company misses views, lowers its full year guidance, just kind of scrolling through to show you, here's the chart of Verizon, and it did, in fact, gap down. That in and of itself, one single stock, not big news, but it really is part of a trend. As I put here in the article, AT&T also gapped down because it lowered its free cash flow outlook. This is just the continuation of a trend we're seeing of different consumer spending, perhaps slower consumer spending in different ways. The media has talked so much about a recession. Is this becoming a self-fulfilling prophecy? Not denying that there's a lot going on in terms of the supply chain and in terms of shortages of certain products, commodity prices. But what is all of this saying about the broader market? Let's take a look. All right, so using the S&P 500, and this is not the benchmark for everything. I know that as U.S. investors, we're kind of used to this. In this case, since we're talking about Verizon, it's appropriate because that is a large cap domestic stock that is part of the S&P 500, but don't ever call it the benchmark index unless you're benchmarking for the performance of big U.S. stocks. Okay. So we're seeing what the broader market is doing today. Not only did we have Verizon, but we had Snapchat. Those are a couple that came to my attention here. And you do see, let me pop over to a 5-minute chart, what we're seeing happening. You did have some uptick at the open, but then some sell-off as the day went on. Looks like, though, it's pretty contained. And I could see that on the daily chart as well. You see that there. Not undercutting yesterday's session low. And of course, yesterday, as I'm speaking, yesterday would have been Thursday, the 21st. So on Friday, the 22nd, we're not undercutting that. Who knows what could happen as we head into the last 30 minutes or so of the trading session, because sometimes you do see some selling at that point. But let's go back over to Verizon on a daily chart. And you saw a gap down yesterday. You see a gap down today following the earnings. So there was clearly some indication here after the AT&T report that I mentioned a few minutes ago, where AT&T did say that it was seeing some changes in consumer behavior in terms of wireless customers. That obviously scared the market for what they were seeing with Verizon, anticipating for Verizon for its earnings report. And the market was correct in that estimation, by the way, because, you can look at analogous businesses and you can often see similarities industry-wide, and that's what's happening here. So what does all of this mean? Well, the recession talk, maybe it's real, maybe we are seeing a slowdown. We are seeing a slowdown, not maybe. That does appear to be happening. And you might be seeing some companies taking a hit based on fundamentals. Now, again, I'm going to go back to the SPY and take a look at that because that's going to show us we are remaining above this June 17th structure low, okay? Well above that. And we've got ourselves a nice little trend line going over here. I mean, if you kind of just go like that, see that trend line, you get some weekly bottoms in here, but you've got another one there. If you kind of tag that low from sometime in early July, then you do see that we could be a much longer way away from any kind of rally if the market does indeed continue to trade lower, as we're seeing today, based on some of these earnings reports that are coming in a disappointing way. All right, this is just something to look at right now. Thanks for watching today. Hope you found that helpful.